Hi everyone, my name is Rizky Hakim from class Blemba 36. Today I'll be presenting my topic for the Economic and Business Landscape course, which is an economic analysis of the electric vehicles or EV industry in Indonesia, along with the current policies that are driving or holding back its growth. We'll take a look at the market trends, consumer behavior, policy effectiveness, and also compare how Indonesia stacks up against countries like Norway, China, and Thailand. In the end, I'll also share some recommendations on how our EV strategy can be improved moving forward. Indonesia is actually showing a lot of interest in electric vehicles, and government is already pushing the direction with supportive policies. But even with that, EV adoption is still pretty low because of a few big challenges. First, let's look at the growing interest. From 2019 to 2023, EV sales in Indonesia grew more than 10 times. That's over 7,000 units sold. But if we look at the bigger picture, EVs still make up less than 2% of all vehicle sales in the country. So people are curious. Even the highest Google searches in Asian for EVs came from Indonesia. But that doesn't always lead to buying one. Second, the implementation is all over the place. There aren't many EV models to choose from. The price is still quite high, and charging stations are limited. The government gives incentives like tax cuts and import duty waivers, but they are not strong enough to really change people's minds. Also, different parts of the government aren't always working well together, which slows everything down. But here's the good news, there's a big opportunity. EVs can help us cut down on fuel imports, bring in more foreign investment, and make Indonesia a major player in the EV battery industry. We have plenty of nickel, which is key for batteries. The government has set a target: 2 million electric cars and 13 million electric motorcycles by 2030. So, there's real potential. We just need to get the execution right. Okay, so EV sales in Indonesia have grown like crazy, from just about 100 cars in 2019 to over 23,000 in 2024. That's a huge jump, right? But here's the catch. Even with that growth, EVs still make up less than 2% of all cars sold. So yeah, the numbers look impressive, but overall adoption is still pretty low. Most of these EVs are being bought in big cities like Jakarta, Bandung, and Surabaya. In other areas, it's still hard to find charging stations, which makes people think twice before switching to an EV. Another interesting thing is that a lot of people are searching about EVs online. Indonesia actually has the highest EV search score in Asia. But just because people are curious doesn't mean they're buying. So there's a clear gap between interest and actual action. Bottom line, we've made progress, but if we want more people to actually drive EVs, we need better support, like more affordable prices, better infrastructure, and easier access across the country. So even though interest in EVs is growing, a lot of people are still holding back when it comes to actually buying one. One big reason? Yes, price. EVs are still seen as expensive, and most buyers in Indonesia are super price sensitive. Meaning, if the price goes down, way more people would consider getting one. Another issue is the lack of variety. For example, there aren't many seven-seater EVs available, which is a problem for big families, especially since that's a common need here. On the motorcycle side, people care most about battery life, whether it's easy to charge, and safety. Also, things like brand trust, where the car is made, and whether there's reliable after-sales service really matters. If people aren't confident in those things, they won't buy. Lastly, even though people are starting to worry more about the environment and high fuel prices, that concern hasn't fully turned into real action yet. So, overall, price and practicality still drive most decisions. So, EV actually have huge potential for Indonesia's economy. If everything goes well, the EV and battery industry could add more than 100 trillion rupiah to the GDP and create over 530,000 jobs. That's a big deal. And it could also help cut fuel imports and attract foreign investors. But the problem is, there are still some big roadblocks. For one, Indonesia still depends a lot on foreign brands and doesn't have a strong local supply chain yet. That makes it harder to grow the industry in a sustainable way. Also, government policies are still pretty passive. If we want real progress, we need bolder steps, like lowering taxes for buyers and helping local manufacturers grow. On the bright side, Indonesia has a lot of nickel, which is super important for making EV batteries. That gives us a big advantage to become a regional EV hub. But for that to happen, we need better coordination between sectors and stronger implementation to really unlock the full benefits. Alright, so here's the deal. There are still a lot of things making it hard for EVs to take off in Indonesia. First, they're still pretty expensive, mostly because the battery costs a lot. That's why most people still can't afford one. On top of that, compared to the other Asian countries, Indonesians have less buying power when it comes to EVs. Then there's the incentive problem. Most of the support from government goes to the electric cars, even though most people here ride motorcycles. Plus, the government doesn't really have a big enough budget to keep giving out long-term support. We also have an infrastructure issue. It's a classic which comes worst situation. No one wants to buy an EV if there aren't enough charging stations, but companies don't want to build stations if no one's buying EVs yet. And let's not forget the electricity problems in some areas and the fact that a lot of people still don't fully understand how EVs work. So, if we want to see more people switch to EVs, we need better planning, more education, and support that's spread out fairly, not just for cars, but also for bikes too. So the government is trying to make EVs more affordable and attractive through a bunch of fiscal incentives. Basically, things that help cut down the price or cost of ownership. Here are some of the main ones. VAT is cut 1% if the EV has at least 40% local content. That's a big deal compared to the usual 11%. Luxury tax or PPNBM is set to 0% for electric cars, which helps reduce the upfront cost. Then there's BMDTP, which means no import duty for certain EV parts. Good news for manufacturers. Motorbike buyers can get a 7 million subsidy, either for buying a new electric motorbike or converting their fuel one. There are also tax breaks on vehicle registration or PKB and BBNKB, especially in cities like Jakarta. And for companies, there are tax holidays and faster depreciation benefits to encourage more EV investments. In short, these policies are here to lower costs and encourage both people and businesses to get involved in the EV ecosystem. So, when we look at how well the current policies are working, it's a bit of mixed bag. On the plus side, tax incentives like VAT and PPNBM cuts are working. They help boost EV car sales by over 65% in 2023, which is a solid win. Also, SPKLU charging stations are starting to grow, with over 1,000 units built by 2023. That's good progress, especially in cities. But when it comes to motorbike programs, things aren't going as well. Only about 5.7% of the motorbike subsidy target was reached, mostly because of complicated rules and not enough public awareness. And the conversion program, same story. Only 181 bikes were converted out of 50,000 target. As for the TKDN policy, it's moving manufacturers in the right direction. But the big 40% requirement got delayed until 2026 because the supply chain is not ready yet. The main point here is, while some efforts are showing results, we still have major gaps in implementation, socialization, and coordination. If we want real impact, we need stronger teamwork between government, industry, and the public. Let's take a quick look at what other countries are doing right when it comes to EV adoption and what Indonesia can learn from them. Norway is the global champ here. Over 80% of new car sales in 2022 were EVs. How? Simple. They have been consistent. No VAT, no import duty, free tolls, bus access, and they've had these perks in place since the early 2000s. China is another big player. They sold over 6 million EVs in just 1 year, making up more than half the global sales. Their success comes from strong government support like the dual credit policy, tons of charging stations, and full integration of their battery supply chain. Thailand is also making moves. They are aiming to produce 1.2 million EVs per year by 2036. To get there, they offer tax breaks and even 8-year tax holidays for EV and battery companies. So what can Indonesia learn from this? First, we need to combine tax incentives with strong support for local EV production, like China and Thailand are doing. Second, we have to be consistent. Long-term, stable policies like Norway's build trust and confidence. And third, don't forget infrastructure. Charging stations and public education are key to making people comfortable with switching to EVs. So based on everything we've seen, it's clear that Indonesia's EV policies need a few upgrades to really deliver better results. Here are 5 simple and practical recommendations. 1. Make subsidies more targeted. Focus on helping lower income groups using tools like DTKS or KIS data. That way, the budget is used more effectively and more people can actually benefit. 2. Support local SPKLU development. Let regions take the lead. Give local governments incentives, land, and proper planning support to build more charging stations outside the big cities. 3. Boost local production. Help manufacturers meet the 80% local content goal by offering tax breaks, setting up industrial zones, and training local talent for EV components. 4. Educate the public long term. Launch a national campaign to explain EV benefits like total cost savings, reliability, and how EVs actually work. People need to feel confident to switch. 5. Improve coordination across agencies. Create a task force or digital dashboard to monitor progress on subsidies, TKDN, and SPKLU, so everyone's on the same page and moving together. In short, a more targeted, local, and well-coordinated approach can help Indonesia move the EV transition forward and make it work for more people. To wrap things up, Indonesia's move toward electric vehicles has a lot of potential. It can boost the economy, create new jobs, and help us cut emissions. But getting there isn't as simple as just offering tax cuts or launching a few charging stations. We need a strategy that brings everything together, from better fiscal policies to strong local industry, better infrastructure, and most importantly, public trust. Here are the key takeaways. First, EVs are a big opportunity for GDP growth and job creation. Second, but there are still big hurdles like high prices, import dependence, and lack of access outside major cities. Third, some policies are working like VAT and PPNBM cuts for cars, but others like motorcycle subsidies and conversion programs still need work. Fourth, to really enforce local content or TKDN, we need real support for local factories, talent, and innovation. Fifth, and finally, if we want this to last, the strategy must be inclusive. Help low-income buyers, support regional charging development, boost research, and teach the public about the long-term benefits of switching to EVs. In short, the future is electric, but it needs to be built the right way for everyone. That's all from me. Thank you for watching.